once you get on the Bitcoin standard, you don't have to worry about these things. You realize there's 100,000 things you worry about if you own real estate, or if you own equity, if you own stocks, if you own bonds, if you own currencies. I don't worry about any of those things. I don't have counterparty risk to a country, a currency, a company, a competitor, a culture, a creditor. None of those things exist for me. They just don't matter, right? Let me just give you some simple facts. The most successful stock in the S&P 500 universe is my stock, which is up 3x to 4x more than Nvidia. Yeah. So Nvidia is the most successful S&P company, but my company's 3x, 2,700% over 4 years or more. The most valuable options in the market are my options. It's like a $70 billion open interest. They're the most valuable stock options in the world. The company with the greatest open interest to market cap in the SP universe is my company. The company with the highest volatility in the S&P 500 universe is my company. The most successful convertible bonds in the market are my convertible bonds. The biggest convertible bond market issuer in the world is my company. The most valuable and the best performing bonds in the world are my bonds. The most successful preferred stock issued is my preferred. The most liquid one is my preferred. And the most successful commodity in the world is Bitcoin, the company that we're built on. So right now, the story is there's a new technology and there's a new financial paradigm. We have pioneered the idea of recapitalizing a publicly traded company on digital capital. If Bitcoin's going up 50% a year and the S&P is going up 10% a year, and the after-tax return of a short-dated bond portfolio is 3%, then that means that someone capitalized on sovereign debts losing 7 to 10% of their capital every year. Someone capitalized on Bitcoin is generating 40% more capital every single year. This is the story hasn't been told by the mainstream media. All they will do is look at this and say, oh, they're taking undue risk. Well, you know what? We have the highest Sharpe ratio. Our returns on a volatility adjusted basis are better. We're really not taking risk. That's the great irony of all of this. So I don't bother worrying about the critics. There are some people, like the S&P is up 10% a year. The entire endowment industry, managing every Ivy League endowment, generates 8% a year. That is, collectively, every money manager running every Ivy League portfolio is destroying 2% of their capital versus doing nothing and buying the S&P index. That's the conventional market. The number of hedge fund managers that beat the S&P last year, 4. The number that beat Bitcoin, 0. So what are we worried about? We're not really worried about the criticism from the conventional business. The truth is, I don't know why anybody buys any of that stuff, right?
So when Jamie Dimon pushes back and says, you know, I don't like Bitcoin, I don't want to talk about crypto anymore, what's your reaction?
100 years ago, people didn't want to install electricity in their factory. 100 years ago, there were people afraid to fly, right? And so 70-year-old executives afraid to get in an airplane, and the year is 1930. What is your reaction? Okay, that's reasonable. His generation is afraid of airplanes. It's 1905, and you know, the manufacturing magnate with steam power in the middle of the factory is afraid to install electricity. Well, what's your reaction? Well, his generation didn't grow up with electricity.
So you're saying these folks are limited?
I'm just saying it's a generational thing. Warren Buffett grew up in a world of a set of assumptions. The dollar was reigning supreme, and U.S. equities were a reasonable bet, and his worldview consists of picking a bunch of equities in the United States, and that's a totally fine worldview as long as your portfolio isn't in Argentina. If you had diversified a portfolio of the best equities in Argentina, you would have lost 100% of all your money 3 times in his career. So the point really is, the world's full of people. They have a certain world that they live in. They think relative to that world, and if you think about their views make sense after 40 years or 50 years of success in that environment. I guess what I'm saying to you is when you're on the Titanic and you've been on the Titanic for your entire career and then starts sinking, you have to abandon the Titanic, right? And a lot of people just want to shuffle deck chairs on the Titanic, but that's their view. They can't imagine a different world. For me, it's not that different. It's not that hard because I can imagine relative frames of reference, right? We're not in flatland. We're on Earth. It's spinning while it's rotating around the sun, while the sun is transiting through the Milky Way, while the Milky Way is moving, through the universe, right? And when you understand that, and you can see all the various relative motions, then it seems fairly straightforward. I think that most of the world is coming to grips with this new idea, and let me apologize for them. For 100 years, the only capital asset that a publicly traded company could legally hold on its balance sheet was sovereign debt.
Yeah.
Like pretty much 50,000 public companies are all capitalized on sovereign debt, short-dated treasuries. And that's because the SEC 40 Act says you have to use a commodity. You cannot capitalize on securities. So that being the case, every commodity in the world before Bitcoin was garbage. Gold's an awful asset, but it's the best of the awful. The rest are worse, right? You wouldn't want to capitalize a company on soybeans or natural gas or barrels of oil for 100 years. And gold is not very easy. It's just too slow. You can't easily trade it and move it around. So nobody really did. And so now we're waiting for one commodity that competes with currency, with fiat currency as a capital asset. You just got one. It's only been, institutionally adoptable for the past few years. It was really only in January of 2024 the SEC approved the spot ETFs, and before that point, a lot of people were worried that it would not be designated a commodity by the SEC. And it's only since the beginning of 2025 that the accounting industry has designated fair value accounting for it. So the regulatory treatment and the accounting treatment were keeping back a well-managed organization from capitalizing on it or using it. And even today, no major bank in the world will take $1 billion of your cash, buy $1 billion of Bitcoin, and hold it for you. And so the banking industry has been kept from banking this asset. And so if the regulators don't like it, if the accountants don't like it, if the banks don't like it, every successful, responsible businessman running a responsible institution would be afraid to endorse it because those three things are like third rails. But what happened is the SEC did make it a commodity. The White House reaffirmed that a few weeks ago when David Sachs said this is digital gold. The president told you. And the Secretary of Treasury, Scott Bessent, said we believe in digital assets, and they've explicitly begun to give guidance to the FDIC, the OCC, and the Federal Reserve that they should encourage banks to handle Bitcoin. So we are in a sea change where something that was toxic and scary and incendiary to the world is now transitioning to being an institutional grade asset. I don't expect 60-something, 70-something executives that spent 40 years of their career learning a different thing in a different world to immediately embrace it, nor should you. But that doesn't change the truth of the matter, which is the White House has endorsed this as a commodity. They've endorsed it as the most valuable asset in the entire ecosystem. The only thing the U.S. government won't sell are its nuclear weapons, its national parks, and its Bitcoin, right? Think about that for a second. That's the President of the United States saying, don't sell your Bitcoin, right? That's David Sachs saying, this is the only asset without an issuer that we recognize. And between them and the Secretary of Treasury saying it's okay for banks to custody this stuff, it's pretty clear that we've moved into year one of institutional adoption. These banks are bureaucratic institutions and they're conservative, and if they weren't conservative and careful, they would have got blown up by now. So they will take their time, and over 4 years, you'll start to see them embrace it. But, you know, it's what I said today online. I said, look, when the banks bless Bitcoin and when the experts tell you it's a good idea, everybody will want to buy it. Nobody will need to sell it, and you won't be able to afford it. So if you're waiting for the risk all to be stripped away and for someone richer and powerfuler and stupider than you to tell you it's okay, you'll wait, you'll pay $10 million of Bitcoin.
Yeah.
Right now, you get 99% discount because you have to do a little bit of research and come to your own conclusion.
So what is your outlook? 6 months, where will Bitcoin be?
Higher.
Higher? How much higher? Give me a number.
I don't have, look, I don't have short-term forecasts, and I think that anybody that's holding it for 6 months is thinking wrong. I think the shortest time frame that you should have for buying and holding Bitcoin is 4 years. 10 years is more reasonable. Forever is the best time frame. My forecast is, and I gave this last July, and I've been pretty consistent here, is Bitcoin's been about a 60% ARR asset with a 60 vol for the past 4 years. It has consistently over its life, it has decelerated in growth and it has become less volatile. And if you look at the S&P as like a 15 ARR, a 15 vol, like the VIX is 15 vol to 15 ARR, you have conventional equity here, which is 100x as much, and then you have Bitcoin. Bitcoin is going to decelerate from 60 to 55 to 50 to 45 to 40 to 35 to 30 to 25 to 20 over 20 years. And 20 years out, in the year 2045, it'll be about 20% growing. And the volatility will come in from 60 vol to 20 vol the same way as the structures develop and as liquidity develops. And when we get to the back end of that, I think that the equity portfolios will probably be like 12 ARR, 12 vol, or 15, 15. Bitcoin's always going to be a bit more volatile, and it's always going to be higher performance because it's more useful, because it has all of the guardrails stripped off it. Because on Saturday morning, if there's news in Singapore, someone can go long 50x and cross-collateralize it with their yo-yo coin. And there's no one to say you can't do it. And if they turn out to be wrong, somebody goes short 25x and they wipe them out. But the point of that is that generates volatility. That volatility creates a natural interest and a natural interest rate. Like you can hold a share of my stock, MSTR, and you can generate 100 to 150% interest just selling that volatility. If that's what you want, think of that as the magnetic field for capital. It attracts capital into the network. And as we attract that capital, that drives up the price of the asset because there's only 21 million Bitcoin. So the network is growing because it's interesting, because it's useful, because it's global, because in theory 400 million companies can all trade and settle with each other peer-to-peer with no intermediary, because there's nobody to tell the entrepreneur in Nigeria, don't do that. Everybody can do that. And so I think that we can expect high performance, high volatility, but it will mature. And you know, if you have long-term capital, if you have a portfolio of long-term capital, stuff you're going to hold for 4 years or longer, probably a lot of it is private equity, public equity, or real estate or collectibles right now. What I would say to the normal investor is take some portion of that long-term capital portfolio and allocate that to digital capital. You're buying the world's premier global monetary asset.